In this video, guys, we're going to look at how you can stop getting hammered and losing money on those V-shaped reversals. Stay tuned. Hey traders, a warm welcome to you. Okay, so V-shaped reversal, how can you stop getting hammered? We've all probably been hit by them. But first of all, what is a V-shaped reversal? Pretty much as it says it is. It can be the other way around as well. We could be talking about an N-shaped reversal, but V really is this kind of shape, okay? And we can have it upside down as well. It's not really an N, is it? But you get the point. Market's going along, chugging along. All of a sudden, it drives to the downside. You hop on the short thinking this is an aggressive move. Perhaps it kind of pauses for a little bit, and then it does this and comes straight back up. Classic V-shaped reversal. So what are the clues that we're looking for in this price action that suggests that this could be a V-shaped reversal or that it could be a continuation? Now, the first thing to look at is to say what has caused this. Also look into it and think what has actually caused this to do this. In other words, is this just chugging along, there's no news come out and we've suddenly got aggressive and we've moved down very, very quickly? Has some news come out that's caused this impact? Perhaps ECB has said something, if this was Euro, US dollar, perhaps the BOJ, if it's US DJPY or whatever, you get the point. Has something impacted it fundamentally that's repriced the currency pair? So, and also, how quickly has this happened? If this has happened over a period of a day, then it's a little bit different than this has happened over a period of an hour. So we're gathering all the intel, right? We're looking at all of it. Now, if we have news, let's say news has come out, and let's say it was ECB, let's say they come out and they said something and it's caused a spike, you have got to be prepared for a V-shaped reversal, because you know what these things are like, guys. You've been trading for a while, they come out, they make a statement, perhaps they can go to a press conference, and in the conference they ask and they clarify, and it's a complete bun fight in terms of how the price moved. We can end up being up 500 pips from that low at some point. It's a challenging environment to be in, and most of the time, that reversal, this is a different video and I've actually done one on this before, but make sure you subscribe because we'll go into it in more depth at some point in the future. That's a better trade in itself, looking for the reversal, but that's by the by. What we're looking at is how to not get caught out by this. So if it's news based, you need to take the time. If it's genuine reprice scenario, you will get plenty of time to get on the move. Yes, you'll miss the initial spike. Yes, it'll go down, but it will counter trend. It will then exhibit weakness for a longer period of time, giving you loads more opportunities to jump on board. If you feel like you've got to jump on board there, then you really are playing the game that this thing could just snap back on you. So how quickly has it gone down? If it's gone down very, very quickly, it could just be a lack of liquidity and a short-term supply-demand imbalance that's really going to write itself back again very quickly. If it's news-driven, it could be, again, a knee-jerk reaction. Liquidity is pulled, causing this spike lower, and we could be pushing back up again with press conferences and what have you. So there's those two things to look at. Now, what else do we look at? What's the behavior of the market down here? Okay, if we've got, if we zoom into this part here and we consider that's this area here I'm looking at now, right? If we come down and we have this type of scenario, say, now most people say, hey, that's a great little bear flag, and I will be inclined to agree. However, we want to see decent volume here. In other words, a lot of selling volume coming in, a lot of selling volume there. Yes, there's buying volume because there's probably residual buyers left in the order book from before, whatever that may be. But you don't want to see a lack of volume, because a lack of volume, it dictates everyone's just gone, whoa, what the heck? What's going on? And then bang, buyers come in, there's a massive liquidity vacuum and it causes the price to draft back up. That's a similar as well. If you're one of the guys who likes to do tape reading, you can look at the order book, maybe not with currencies, but if you're trading futures, you want to see it stacked heavily on the offer side on the way down. Otherwise, if it's not, you get the liquidity vacuum where you get a draft to the downside and it can scoop straight back up because someone or a group of people who are market buyers are going to push it up because liquidity is low on the offer side. So that's kind of diversion a little bit, but what you want to see on that low is how it's, how the volume is the good volume flow, is a good transaction, is there probes? Now, let's move on, because this is the key to kind of deciphering what's going on. How are probes to the upside and downside reacted? So this is really price action stuff, guys. I'm only going to touch on it here. We've got more stuff coming, so make sure you're subscribed to the channel when we go into some depth, and I've got some exciting stuff coming up for you guys. But just to touch on the concept here, we want to see how price responds. If price responds, it pops the upside and we get a quick updraft, you say, listen, we don't need it to be a full V-shaped reversal for us to say, but don't like the look of that. Similarly, if we start to push to the downside and it starts holding as it's grinding lower, and we start seeing, stops getting triggered, we start seeing buyers pulling orders, we see different reactions. So it's these little nuances in price that are giving us the clue as to whether potentially this thing is going to be a V-shaped reversal or not. Like I say, just touch on this at the moment. We've got loads more, going to go a lot more depth later, so make sure you are subscribed. If you like this kind of stuff, give it a thumbs up. Avoiding getting caught out by that V-shaped reversal, just a few tips there to look out for. Stay tuned for the next one, guys. I'll see you in the next video. Take care, whatever you're trading, and keep the risk managed. Goodbye.